Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, April 27th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. This is for informational purposes only. I am not a registered financial advisor. I cannot give you individual financial advice. Please do your own due diligence. It's your money. It's your responsibility. Okay, let's get started. Okay, we got a couple slides here from Jesse Felder, one of the people that I follow on X, puts out a lot of good stuff. Commodity bull market intact. Commodity prices are moving higher, driven by the following. This is according to this article by Apollo Academy, which I'll put a link to in the show notes if you want to review it. It says re-accelerating U.S. growth. Well, I would say in certain sectors, right, around manufacturing is turning around now after almost 2 years in recession. Geopolitical uncertainty, yes. We'll talk about that later in the end of near the end of the video when I reiterate my view that we are in already World War III. That's a provocative statement, but I don't think people, when you say that, they don't really understand. Their reference point is World War I and World War II. This is going to be totally different. Segmentation of global trade, which I think goes back to geopolitical situations, and strong AI demand for energy. I would add also to that, and we're going to show a chart later on about energy growth. The emerging markets is where the real growth is. Yes, AI demand and data center demand in the US will cause additional growth for electricity demand. But if you look at the world as a whole, people in India getting air conditioners, that type of thing is really what's going to drive the energy demand. As we've talked about many times, the Fertile Crescent, the new Fertile Crescent, if you will, from Istanbul to Jakarta, those 4 billion people that are now entering their S curve as they enter the middle class, as GDP in those countries gets to $3,000 per capita, you start entering a large jump in commodity and resource consumption. So I haven't read this article, but I just wanted to throw this up there. I will put this in the show notes for your perusal. So here is a chart or a tweet from Bob Elliott. U.S. oil and gas stocks are historically cheap to the broader market. We've pointed this out before. We like to show these charts. Again, we don't want to get into confirmation bias, but this is one of the theses that we have, is that the demand for energy is insatiable. It will continue to be insatiable, mostly driven by the emerging markets. And the investment into new energy has been lacking for at least a decade, i.e., we're going to, it's an opportunity. And when the stocks are historically cheap relative to the broader market, this is an opportunity. So it's good to remind ourselves of where we are. We're not even anywhere near the end of the bull market that I think that we've been in. I mean, the portfolio is doing very well, and I think we'll continue to do well. And we're really focused a lot on energy and other resources. I mean, I'm not like a resource investor where that's all I do. I mean, I will buy things that are cheap. We have other things in there and things that I talk about, but this is what's cheap right now. This is where the opportunity is in resources. And at some point in the future, I don't know when, prices will rise sufficiently to drive sufficient investment to cause an oversupply. This is, economics works unless these governments get involved and really screw it up, which they can just make the situation worse, never better. So I think we just want to ride that wave as long as we can, with the inevitable ups and downs that come along with it. But this is where we're at. And even if we get back to, just this area here, it's a tremendous move, right? Again, gold stocks, cheapest in 40 years. Gold equities have rarely been this cheap in the past 40 years. This is an opportunity, and it's being ignored. This period of the last 12 to 14 years when these stocks have really stunk it up, this is what people have in their, they have this recency bias, this, well, this is, they've been crappy performers, so they're going to continue to be. But the dynamics are changing. If you think the gold price is moving higher, and we do, I do, if the commodity, we think all resources moving higher, and that will include gold and silver, this will be the opportunity. We've already seen some results come out with some of these newer higher prices in the gold price, already stimulating higher and better results in cash flow and earnings at some of the producers. Okay, so I think if you pick your spots, there's opportunities here. That doesn't mean you just go out and rush out and buy that 10-cent, Saskatchewan Junior, that moose pasture XYZ gold mining. I mean, we're talking about, starting out with the large and mid caps, and eventually, as this bull market develops, which I think it will, then we'll have the opportunity to transition into the juniors at some point. But I think as the initial capital comes back to the market, you have this opportunity. I saw a fascinating video. It's like a 6 or 7 minute video this week, and I'm going to put it in the weekly free email that I send out. By the way, the free email is available in the show notes. Sign up for that on Substack. That's a weekly email I put out with really interesting articles, videos that I see, things that I just find interesting. It's a little bit more meatier than this weekly report. It kind of gives you the time to kind of dive into some things. But there was a video on with George Gammon and what's his name? Hugh. I can't remember the guy's name now. Anyways, he was really at one time was this big portfolio manager back in the UK. It's not Hugh Hendry, is it? It might be. And now he lives in St. Bart's. He's grown his hair, and they were sitting there having rum and cokes on the beach, and talking about poo-pooing gold stocks. Now, I'll respect both these guys, but again, is that looking back in the past? I'm going to put that video up because it's very interesting. There was a lot of opinion and a lot of recency bias coming out, but not much about facts. And yes, gold mining stocks stink most of the time. They're not buy and hold investments for your widowed grandmother that's living on a pension and needs dividend income. That's not what these are. These are burning matches. These are trading sardines. There are periods of time about once every 5 to 10 years when these things outperform, and I feel like we're probably getting into one of those times. And so you could have made the same argument about gold equities being cheap the last 40 years. But I think we have a unit, you could have made the same argument over the last 10 or 12 years and been wrong. So, but I think we have a unique set of circumstances that's going to take the gold price substantially higher in a relatively, in the short to medium term, which will bring the focus back to these things. So that's my view. So again, they're not buy and hold. They're more of trading sardines for short periods of time when they do have a tendency to outperform. So, right now in the portfolio, I have some pretty solid, I think, opportunities there that have demonstrated they have some unique characteristics. But, it's not really time, I think, to really be diving deep into the juniors. If that time will come, but I don't think it's right now. But I do think that there is an opportunity here. And there's a big difference of opinion on this. A lot of people are saying, well, yes, these are terrible businesses. They are notorious for destroying capital if you hold them long term. But if you can catch the wave, and like I said, I think this unique set of circumstances is coming together, and I'll explain later in the video why I think one of those circumstances is coming together, then I think that you can see some outperformance here. So here's gold and yen, right? And why is this? Well, Japan is devaluing their currency. They're in a situation where they have a tremendous amount of indebtedness. They're probably the most indebted country in the world. They have their rates basically still down around zero, and they're printing money left and right. They monetize their government debt, and this is what this is what happens when you do that. Okay, when you print more currency units, it's not the fact that people are becoming, the gold price is going up in Japan. The fact of the matter is they're devaluing the currency against things that can't be printed or made more of. Gold, as I said before, people have to expend energy, go into the ground. You can't just expand it 5, 10, 20% a year, what have you. You can't monk around with it. It's only increases by 1% a year. And so it's so uniquely attuned to protect people against these devaluations in currencies. And as I've said before, even people, this doesn't mean it's actionable, it's going to happen, but all currencies eventually, fiat currencies, paper currencies, eventually attain their intrinsic value, which is zero. And this is the path that you see over time. And now this thing's going exponential. So we'll see. This will eventually happen to the euro and to the dollar. It's just a matter of time. The indebtedness, the promises that were made, they can't be paid. Now, that doesn't mean it's going to happen next week. That's the problem. You have to, when's it going to happen? Well, no one knows the future, but you can see the trend. So Trafigura CEO says copper must surpass $10,000 to meet demand in order to fill a potential supply gap of 8 million tons by 2034. Mining companies need prices that are higher than $10,000 a ton and possibly as high as $12,000 a ton, says Trafigura Group Chief Executive Officer Jeremy Weir. And, this supply gap in copper is, been exacerbated by several mine closures, or what happened in Panama, what's happening in Chile. And, the political elements now are starting to exert effects on the supply of this commodity while it's in a growth mode, while demand is growing again in the emerging markets. It's not necessarily going to be driven fully by the data centers and AI demand in the US. It's going to be driven by simple stuff like air conditioners in India. Long story short, copper's got to go higher to stimulate the investment to increase production. So Robert Friedland, Mr. Copper, billionaire, what's he say here? Copper hit, $10,000 a ton for the first time in 2 years, and that may be just the beginning. It is just the beginning. It has to go much higher. It's going to go much higher than people believe. That's what's going to happen. And so, we're seeing the emergence of copper shortages. Here's a S&P Global article from last week. It says South Korea's LSMNM to cut copper production on concentrate shortage. South Korea-based copper smelter LS Metals and Materials is to cut copper production 40,000 metric tons in 2024 due to a shortage of copper concentrate supply, according to market sources. A company representative was not available to comment. LS Metals and Materials has 680,000 metric tons of copper production capacity and supplies refined copper to China and Southeast Asia. Supply disruptions from Cobre, Panama, and copper condensate exportation bans from Indonesia origin shipments starting in May increased difficulties to Korean smelter to meet production needs. And we've seen the same announcement out of some Chinese smelters. We've seen them lower concentrate processing fees almost to zero in a bid to draw more concentrate in. The problem is they don't have enough concentrate to deliver to these smelters. That means shortages. That means prices are moving higher, okay? So this is the people that actually process the raw ore into refined copper don't have enough ore coming. It's not because of demand. The demand's there. It's because of supply. And like I said, I've seen other articles where Chinese smelters are in the same position. And so what are we seeing? Anglo American or BHP is offered $39 billion to take over Anglo American. Why? They want to get Anglo American's copper assets. Okay. You're going to start seeing more of this consolidation now, mining on Wall Street, as we've called it before. All right. Because the timeline to go out and just find stuff and start from ground zero takes 10 to 15 years, as we've talked about before. And right now, Anglo American, I think, is undervalued. If you strip out the copper assets away from the South African assets that are a drag on the company. That's kind of what BHP is looking to do. And so let's look at the information from the article. Anglo American rejected rival miner BHP Group's 31 billion pound takeover proposal on Friday, saying the bid significantly undervalued the London-listed company and its future prospects, mostly copper. Australia's BHP, which has until May 22nd to make a binding bid, is expected to sweeten its offer to try and clinch a deal that would create the world's biggest miner of copper, a metal central to the clean energy shift, accounting for about 10% of global output. You know, they always talk about clean energy, like that's not the main driver. That's a contributing factor. The main driver is the emerging markets. Those 4 billion people entering that S-curve. That's what's driving this, mostly. Anyways, a condition of BHP's proposal is that Anglo first distributes to shareholders its stake in Anglo American Platinum and Kumba Iron Ore, both of which operate in South Africa, where BHP has no assets. And they don't want to deal. We don't need to get into what's going on in South Africa. They want that stripped out. It's very easy. You put that together into a new company and spin it up to current shareholders of Anglo American, and then the copper assets go to BHP. So again, this price is probably going higher. I think at one time, not too long ago, Anglo American was like at a $50 billion market cap or something like that. I took a quick look at it. So this is undervalued, and BHP's trying to get these assets. They know where things are going. And it's like, okay, should we just spend the money and get these assets that Anglo American really doesn't have the ability or the financial backing to really develop on their own? BHP is the world's largest mining company. So I think the takeaway from this is you can expect more of this. You'll start seeing people start looking down the food chain of other copper producers. Like Teck is probably in somebody's, that's a big Canadian miner. They've really divested away from coal and other things and really focusing on their copper assets. So that could be, one to look at. There's a whole list of them. Then you start getting down into the mid caps. These large mining companies need multi-billion-dollar type projects to really move the needle. But you could see, I don't think you couldn't see the possibility of, some of these mid caps even merging. So I think you'll see more of this. Once these things start, they usually continue for some period of time. And this is kind of letting you know what's going on and what's really happening. Could we see a bid from Rio Tinto or Glencore for Anglo, and then this thing really gets bid up? I don't know. I'm not predicting that, but anything's possible, right? When you start getting into these things. But something to keep an eye on. I mean, copper, most people are not paying attention to it. They don't understand what's really going on the demand side. I think that people are still asleep about the supply side. And I think, once we hit we're in like the mid $4.50 a pound, something like that. If we get to over $5 a pound, I think that wakes a lot of people up. I will say that the company name I gave out, which was Amerigo Resources, which is a processor of copper tails in Chile, has moved quite nicely and made a new 52-week high recently. Based on the move in copper price, it's really just it's just a manufacturing. It's not a mining company. I don't consider it mining. They just process tails and extract the remaining copper out of them. And as the price of copper goes up, their margins expand. It's just turns into a cash flow machine that buys back shares and pays dividends. So something to look at. It's not going to be a 10 bagger, but it's, an easy way to play the copper. That's why I gave it out. In the portfolio, we're looking for multi-baggers, but occasionally I like to drop a company, that's, at the current dividend rate. I think Amerigo pays a 7% dividend, slightly under 7%. So as their cash flows increase, they should increase the dividend or have a special dividend. They were buying back shares, but they kind of turned that off when copper was under $4. We'll see what happens. So this goes back, I got this from Trader Ferg. He puts out something similar to what I do. His Ferg's Finds. You can go to, I sign up for free. He puts it out for free. Something similar that I do with my weekly email. He sends out things. I missed this, but this is a good chart that kind of talks about what I was talking about earlier. This is the change in electricity demand by region 2022 to 2026. And as you can see, you see down here the different colors: China, India, Southeast Asia, rest of the world, advanced economies. You go out here to, where we are now, the emerging market and developing economies. This is where the growth in electricity demand is. That's why I put up here. It's the emerging markets, stupid. Advanced economies, yes, because of the data center and AI situation, they're going to increase their demand for electricity. But the real growth is here, and it's not going to happen without copper demand. Okay, electricity demand, supply is all copper based. Yes, there's other metals involved, aluminum, steel, but if you start, looking at all these transformers and all this stuff, this is all copper. Okay. This was interesting. This is from Malden Economics. Got this off Twitter, I believe, or X. I didn't realize the outperformance had been this great. So you have the S. This is since March 2020. Energy, well, basically oil and gas, has outperformed tech since March 2020. So you have the S&P right here. It's up since March 2020, up 141%. XLK, which I believe is a tech. I didn't look up the exact name of the ETF, but I know the XLE is the oil and gas ETF, and you see the outperformance. And I think I would suggest you it's going to continue, especially as we've talked about before. I don't need to keep rehashing the same thing, but I think I found this fascinating that I don't think most people realize that. Yes, you've had some outliers with the Magnificent Seven, which have outperformed the average energy stock, but we talk about in totality, this is kind of shocking. And so can this outperformance continue? Yes, because I believe that we're in a secular, multi-year, decade-long situation. Again, energy demand is going to continue to increase. It continues to increase. We're already exceeded the pre-pandemic levels, okay? And again, doesn't matter what the U.S. and what's happening in the U.S. or Australia, New Zealand, and Europe, it's all in the emerging markets. That's where the growth is. That's where the energy demand's coming for the next several decades. And a lot of people are missing this. So I thought this was kind of like a upside the head. Wow, I didn't realize the outperformance was that great. So this is from Bison Interests. A lot of people now are starting to discuss the point that we are entering a stagflationary environment, stagflation being defined where inflation stays elevated or goes higher, yet economic growth stagnates. Okay. Something similar that I lived through when I was a kid in the 70s. This is when I started first reading the end of the 70s. I mean, I was just probably 13 or 14, and 78, 79, 80, around there, talking about 1970s. That's how far back we're going. And I, of course, wasn't some investment guru or didn't know anything then, but I had an inkling of what was going on. I mean, you would see the reports on the news about rates being raised, inflation. I've told the story about, going over to my grandparents' house, who were basically immigrants that, barely spoke English, that were undereducated. They had accumulated some wealth through just hard work. And I remember, my dad sitting there and trying to explain to my grandfather about, get your money out of these banks that are paying you nothing, and I'll take you down to the Minneapolis Federal Reserve Bank and get you into T-bills. Back then, you couldn't just go online like you can now. You can go right on the Treasury website and buy T-bills within 15 minutes. Back then, you had to go down to the office with a cashier's check to the window and fill out a bunch of paperwork, and then they would sell it to you. Then they would send you a postcard a couple weeks before these things matured, and then you would mark on there if you just wanted to roll them. And that's how you had to do it back then. I mean, rates were like 15 or 16%. My grandfather didn't believe it. And he didn't understand that when you pay it, it was a discount. So you got a check right then. You didn't get your interest at the end, right, of the period. So say it was 6-month T-bill. So he didn't understand that. And then he was like shocked. And he's like, man, this is a pretty good deal. So I just tell that story because I think that just in my lifetime, I've seen how things have changed. The whole period, that was like my formative years. And it took me a while. Of course, I was, a couple of years later, when the Reagan administration came in and got rid of a lot of regulations, that was a big reason why inflation came down too. It wasn't just Volcker. And I didn't understand that change in what had happened. We had the left inflationary environment of the late 60s, 70s that had been put in place with the money printing for the Vietnam War and the Great Society. And my formative years were based in that inflationary, stagflationary environment of the late 70s. And it took me a while to understand we weren't in that anymore. And as they cut rates, that 40-year bull market, if you just would have bought, bonds, when Volcker was raising rates near the top, when they started cutting rates for the first time and Reagan got elected, that was the beginning of a 40-year bond bull market. If you would have just bought zero coupon bonds, you would have and just held them for 30 years or 40 years, you would have made a ton of money. And of course, I didn't know that when I was 16 years old. I was still operating from the paradigm that I had been raised in, that I had seen that affected my life. And it took a while to understand, that we were in this market, and then you have to shift your thinking. And the reason I'm talking about this and bringing this up is because I think that we're in another situation. I think that the 40-year bull market in interest rates going down is over with. Okay, and now we're entering a secular multi-decade era of elevated inflation, elevated interest rates, poor bond, all the things that worked for the last 40 years probably aren't going to work as well going forward. And that's the point I'm trying to make. And I'm not going to, I think from my experience now, what I saw at that turning point, it was difficult to recognize, and it was difficult for the financial markets that had been accustomed to investing. This is when gold was very popular. You had to stand in line to buy gold and silver. You'd see all the energy stocks. I told a story about Dome Petroleum was one of the big, high flyers back then. Energy was doing very well. And this is an example right here, this chart that Josh Young's outfit Bison Interest put up. Inflation adjusted total returns for select asset classes, 1971 to 1981. And you see over here on the left, the best performing asset class was energy equities, and then REITs. And then you just see like the S&P 500, corporate bonds, and treasuries underperformed, right? And so this, I think that a lot of people are thinking that we're re-entering this, and it seems to be that way. Then you put on then you add to the equation the fact that we're then possibly a paradigm shift away from a unipolar world led by the United States to a multipolar world. What does that mean for global trade, resource development, economic cooperation or not, lack of cooperation? Trading blocks are changing. So that is possibly inflationary. Plus the fact that, I think that we're in a cold World War III right now, with the emerging multipolar world as the U.S. and its satellites try to hold on to their hegemon. And this isn't a popular view, but I think you're at one of those turning points, not to mention the fact that the developed world is massively in debt, has massive demographic problems, has massive moral and ethical issues, and stagnant political apparatus that doesn't recognize what's happening and is trying to run the old playbook that isn't going to work. And these things, I think, are going to lead to more inflation. Why? You're already going to see it. I mean, how are all these? I've talked about this so long. I wrote an article maybe almost 10 years ago about Social Security and Medicare. The math doesn't work. The debts, you cannot run these deficits like this with these interest rates consuming more and more of the budget. I mean, you simply won't be able to raise taxes to pay for all of this. There's a limit to how far any government can raise taxes. And so what they always revert to is monetization of the debt. And so you couple all these things together, that old paradigm of 40 years of declining bond rates and interest rates and low inflation has to be over. And so what thrived during that time, okay, probably isn't going to do well going forward. That's the point. And then the question you have to ask yourself, are we in fact at that turning point? And how many people can actually see it? How many people won't see it until 3, 5, 10 years down the road, or never see it? I mean, that's why you have this conversation about these gold bugs. That's why a lot of these guys are older guys that saw what happened in the 60s and 70s, and they never understood that there was a paradigm shift. Now it's finally shifting again, possibly. It looks like it may be, to having the wind in their sails, but they're at the end of their life. So we'll see what happens. I'm not suggesting that this is in fact what's happening or is going to happen, but I just wanted to point this out, that in fact, if we are going to this type of period of stagflation, then based on history, you can see that you don't want to be in the things that worked the last 20, 30 years. You want to be in things that, on this side. So we'll see. This is Tavi Costa threw this up. I think it's from Bank of America. Yeah. And so this is basically ranked asset returns in the 1970s. This gives you even more data. So basically, this is telling you the asset classes. They kind of do something on U.S. global investors with commodities, but you can see the best performing asset class for each year in the second, in the third, the fourth, and you could see what happened. You had 1, 2, 3, 4, 5, 6, 7 years out of 10 that gold was the top performing asset class during the stagflation of the 70s. And then you had commodities being 1, 2, 3, 4, 5, up there also. So obviously you can see the corrections that happened to it. I think this is really illustrative. Why? Because even during the secular bull market that you had in gold and in commodities, there were times where 2 years in a row where gold was horrible. It was down 24.8%. Okay. There were drawdowns. Same thing with commodities, right? They never really went negative, but, didn't have, good. This is what happens. You have corrections during secular. You can have a cyclical bear market inside of a secular bull market. So I think that's a thing that people need to remember. They say, well, and this applies to the resource markets today. So many people start DMing. That's why I don't respond a lot to people that much when they DM me with their, whatever, they're on the fainting couch because, oh, I bought this and it's not doing what I want it to do in the next 60 days after I bought it. Well, you need to look at this chart. If you're in a secular bull market that's a decade long, there's going to be pullbacks. And so that's one thing you can glean from this. The other thing you can glean is, if you believe that we're entering a stagflationary environment, which the argument can be made for the various reasons I've already talked about, then you can see what performed best last time. But again, you will see that, there were periods where things pulled back. For 2 years in a row, gold underperformed, was negative. Did people hold through it? I don't know. Do people have conviction? I don't know. How do people arrive at their convictions? Do they do research? Do they understand? Or are they just listening to some random moron on the internet? Just because I say something, or Cuppy says something, or George Gam, whoever you're listening to, you have to take these things with a grain of salt and do your own research and arrive at your own decisions and conviction. I'm not going to lie. I get a lot of ideas from a lot of people. That doesn't mean that every idea that I listen to, I go with. I do my own research and I say, well, that argument makes sense. And I think there's potential there. And I think that's what people need to do. And then over time, you need to, understand, what you're capable, what risks you're willing to take, and things like we've talked about this before. But I think this is a really good chart that I think people should, and I'll probably throw this up in the weekly email too, because people should have this imprinted in their brain that you know, just as an example of that, even if you're in a secular bull market, you know, what that meant. I mean, look at the fact how what happened to the dollar during that time. Look at tech. These people that are all the tech bros, yeah, there were a couple years of outperformance. There were years of decent performance, but there were years where 1, 2, 3, 4 out of the 10 years, 5 out of the 10 years, they had negative returns. So something to keep in mind. So I wanted to throw this up here. Not that it's not going to change the needle on uranium demand, but even Ghana's getting in on nuclear power now. I mean, what does that tell you about the demand about nuclear power? It is the solution. I don't know if this plant ever gets built. I don't know what's going to happen, but I just think that even discussing this isn't even a discussion you would see 2 or 3 years ago. And now you're going to see more of these discussions. We're already seeing them. And this is part of the multipolar world. The United States should be doing this. We don't have a nuclear industry that we can export and use as a way to develop friendships and ties with other countries. The Chinese do, the Russians do. That's why they're gaining ground in the global East and South, and we're having to resort to threatening everybody with financial wars and physical wars. That model doesn't work. Nobody wants that model anymore. Okay? People want cooperation, mutual benefit. Now, you can make the argument, well, China just is going to exploit people worse than the U.S. is. Well, it is what it is. Nobody's saying, hey, take this nuclear power plant or we're going to bomb you, or, it's a different mentality. I'm not saying that a multipolar world would be better than the current world. A lot of people in the U.S. and think tanks are making the argument it won't be. It may be a situation for many of these countries, meet the new boss, same as the old boss, but it's inevitable that's where we're going. And I think this is, yes, on the first level thinking, it's indicative of the growth of uranium and nuclear power. Okay, that's inevitable. That's the energy source of the future. It's going to continue to grow. We've made a ton of money. We're going to make a lot more money because there's just not enough uranium. The price needs to go substantially higher. Seeing this is, this is what we want to see, increased plants. But on a geopolitical scale, this is what the Chinese and Russians and others are doing. They want, hey, we'll build you this nuclear power plant. They're probably going to run it for them. They're probably going to supply the technicians, the fuel, the whole shebang. Okay. And so what do we have to offer? Are we even, the activities I've seen of the U.S. is we're getting kicked out of African countries like Niger. And of course, the Russians and the Chinese will move in because, the only reason we would have relations with China or with Niger is because, or France is being kicked out is because they want the uranium. Well, you have to make it mutually beneficial for people. It's not this colonial mindset that we go in and we take what we want and you subjugate yourself to us. That's not going to work anymore. People are not interested in that. They want to know what's in this for me. These are our resources. These are our assets. We are poor. They're exporting uranium and 90% of the people in Niger, I think, don't even have electricity. So, that's why they had the coup. Do I think that these African, do I think that they're solid citizens that want to do the best for Niger? No. They want to get rich too. But, if you expand the pie, you can steal more. That's, I think, how a lot of these new leaders in these countries think. So regardless, it looks like this might happen. Look, it says Ghana's thermal power generation is fueled largely by natural gas, but occasionally using light crude and diesel. Ghana exports power to Togo, Benin, and Burkina Faso, which are also poor countries. So we'll see if this actually happens, but we're seeing more of these announcements. That's the point. So this came out this week that basically the German Green Party falsified reports that were made on the shutdown of the nuclear power plants in Germany, basically making the situation worse than it could be because they just wanted to do whatever it required to shut those plants down. And I'll put a link in the weekly email to another article that expands on this. It's beyond the scope of this discussion, but basically This is kind of a scandal now that's erupted there, right? And it says, in the spring of 2022, it was clear to experts with the major Russian attack on Ukraine, the nuclear phase-out was history. After the failure of Russian gas supplies, the risk of widespread power outages and skyrocketing electricity prices seemed too high to afford a nuclear shutdown. But things turned out differently. After a short period of operation over the winter, the last German nuclear power plants went off the grid on April 15th, 2023, about a year ago. How could this happen? Cicero editor Daniel Graber has released documents that now allow an insight into the decisions of Economic Minister Robert Habeck. He's from the Green Party. The report suggests that top Green officials from the Economics and Environment Ministries deliberately falsified expert reports. They obviously wanted to push through the nuclear phase-out at any price, even necessary against all economic and scientific reason. And so that's what they did. And so now you're in a situation where you're burning more coal. Then they went ahead and turned a blind eye as the U.S. and the British probably blew up their gas pipeline to Russia. And now, you know, the place, it's chaos now. It's complete absurdity. It's so ridiculous, it's unbelievable. And so now you're starting to see a populist backlash because I think people are waking up that, you know, well, you know what? These political parties really don't have my best interests here. And so, you know, you're in this terminal economic decline in Europe. Okay. It's not just in Germany, it's all over. It's sick, decrepit. And so you're importing, you know, in the meantime, I'm not going to get into it. I've talked about it before. You want to talk about the dumbest, stupidest, most ridiculous, not well thought out string of events. Robert Habeck and the rest of the funky bunch, I mean, they basically just tanked Germany. They tanked it. And they're going to get wiped off on. The Russians are going to win in Ukraine. They're winning. I don't care what anybody says. Watch the reports. They're advancing all over the place. The Europeans and the U.S. do not have the industrial capacity to support Ukraine militarily. The $61 billion that got approved isn't going to do a darn thing except for go back into the defense contractors' pockets and then be given a portion of it given to politicians as political contributions. That's the game, okay? And what did Germany get out of it? It gets to be deindustrialized, becomes poorer, unstable, and then what? And then the U.S. walks away from the thing, and there you go. Again, the whole thing, the whole point of NATO is what? It has been, is to keep Russia out of Europe, to keep Germany down, and keep the U.S. in Europe, okay? And now you've got, you know, they don't know what to do. They're panicking over there because the Russians are going to win. There's not going to be a DMZ. There's not going to be an agreement because the Russians now know that the West is, you know, not capable of making and keeping agreements. And so they will continue moving the front. They will continue winning like they are. I hate to tell you that. It's not 2 years ago. It's now. You know, it's like the bunker mentality that a lot of people in the West or a lot of the people that support Ukraine seem to have. That they have the bunker mentality that was prevalent in April 1945 in Germany, reliving the past successes of the Blitzkrieg across France. Well, that's not where we're at now, guys. We have Russian guns we can hear at the Reich Chancellery, okay? It's over. And so the Russians will impose a peace. If, you know, and so that's what's going to happen. And so what does that do geopolitically? What does that do to the EU? What does that do to NATO? What does that mean? You know, most of the time geopolitical things don't really matter to markets, but this is part of the whole World War III. This is what's going on in both Gaza and in Ukraine. This is part of the hegemon trying to hold on to its power, and it's, you know, it's slipping. We'll talk about that, and this is part of it. Germany should be aligned with Russia. German know-how, scientific and engineering greatness, combined with Russian resources and markets and a conduit of markets to the east and the global south and east could have made Europe a powerhouse in the world. Oh no, because the US doesn't want that, because the US then is cut out. They're over here across the pond, they're out. It goes back to the whole Eurasia, whoever controls Eurasia, or that this part of Europe and controls all this, controls, that whole area there of Central Europe, Eastern Europe, controls the world. So there you go, man. I mean, that's my view, but it gets more complicated, obviously, but that's what's happening. That's what all this is about. So here's some more to go on about this. The reactors can still be restarted, by the way. It says experts, nuclear power plants that have been shut down can be reactivated. It is also noteworthy that when Cicero editor Daniel Graeber sued in court for the release of the nuclear files, Habeck's experts were unable to state whether the deactivated nuclear power plants could still be activated. Now the Cicero magazine, citing experts, says that 5 of the last 6 German nuclear power plants could be reactivated with reasonable effort. The dispute over Habeck's decision to shut down the last remaining nuclear reactors in the worst energy crisis in decades is likely to be anything but over, and the debate about how much Habeck really knew is just beginning. And again, I pointed out there's polls in Germany that close to 50% of the people are open to having a discussion about reactivating nuclear in Germany. Okay? And so you're going to see a populist backlash. I mean, these governments are not in power for helping their people and making their people's lives easier and more prosperous. Okay? They're in it for themselves. And, that's why you see these absurdities like tearing down 100-year-old Black Forest's trees to put up a wind farm, or tearing down part of a wind farm that's already been built so you can get to the lignite coal for the coal that you need to burn in your power plants because you shut your nuclear power plants down. It's just absurd. But that's why these people shouldn't be allowed into power. They're absurd people. They're petty people. They're stupid people. And this is what, they get into power. What's their qualifications? They've mucked it up completely. Hopefully, people will wake up. I'll tell you one thing. They can either wake up and change it now, or when the Islamists come to power, which they eventually will, there will be changes. I can guarantee you. There will be changes. So I wanted to point this out, World War III update. Felix Zulauf Consulting. I think there's a video out where he just got interviewed by Grant Williams. I'll try to find it. This is one of my go-to guys. I really like. I've listened to this guy for decades. He used to be on the Barron's Roundtable. Very, very insightful man. And so I just want to give you this quote that he said. And, this is exactly what we're talking about. This sums up everything right here. The US-centric unipolar world is in the process of ending, but the US and its Western allies are trying to defend it. China, the rising challenger, keeps pushing for a multipolar order and has the support or sympathy of the global South. This geopolitical conflict transmits regional conflicts like those in Ukraine or the Middle East into proxy wars that take on a much more important meaning. That's exactly right. That's my view exactly. And people will say, well, the World War III will not be, Pippa Malmgren said something similar. World War III, we're already in it. It's not going to be, if your reference point is World War I or World War II, Chinese tanks aren't going to be rolling down Pennsylvania Avenue. You're going to have cyber attacks. You're going to have economic warfare. We've already seen that. You're going to have these proxy wars, okay, as these various countries maneuver to get their proxies to do their dirty work, okay? That's what you're seeing right now, okay? And the dangerous thing is that the U.S., instead of recognizing and coming inward and fixing the problems in the U.S., the other day you had, after the $61 billion got approved, Democrats and Republicans waving Ukrainian flags on the House floor. Okay? While the border's out of control, while we have homeless problems, including homeless vets that are committing suicide, while we have infrastructure problems, the American Society of Civil Engineers grades our infrastructure in the U.S. as D-. These people hate you as the average American. They have no interest in representing you. They don't represent you. They represent the oligarchy. They represent the donor class. They don't care about you. I've pointed this out, and most people just can't seem to conceive of this, because if you do it, then your whole world gets turned upside down. No, neither party represents you. No, you should not participate in the political system because it's corrupt. So if you don't understand this, keep voting harder and see if it changes. You're going to have, that's why you see populism, or, as they try to describe it in the media, nationalism, fascism, whatever they're trying to say. People are fed up. They don't know exactly what's going on because most people just don't get it. Most people are never going to get, but they can tell when they can't make their budgets work, when you have a whole generation of people that's priced out of housing, when they can see all these problems. And even the people that voted for in these blue cities up north now that are getting overwhelmed with these migrants, and resources are being taken away from them, already meager resources that they were relying on, and given to these undocumented illegal aliens. I find it amusing. Events of, I forget who said this. Everybody eventually sits down to a banquet of consequences. And that's what people are doing now. They're sitting down to the banquet of their consequences for the decisions that they made, and so that's the whole point, right? In your life, you should try to minimize risk, but most people don't operate like this. People have low time preference. I'm not going to get into psychology, but yeah. And so that's why you're seeing the rise of populism, both on the left and the right. And so you're going to see these big, huge swings in populism because neither one of them has the answer. The real answer is, decentralization. The United States the continent, North American continent, should be dozens of countries, and people should vote with their feet. They're already doing it in the US. They're already doing it in Europe. You have the Biden administration talking about, these people are just flat out neo-Marxists. If they get reelected, they want to put forth legislation to raise the capital gains tax to 46% and tax unrealized gains because certain demographics in the US don't have any wealth, and they think that will solve the problem. Okay. Keep voting harder. In the meantime, the infrastructure is falling apart. I'm not going to keep going, but this is going to have an effect on so many things, and the reason why prices are going to stay higher. Why? Because in a regime where you're having two blocks of countries with diametrically opposed views, you're not going to have trade. Perfect example: the Iranian proxies in Yemen, who support the Palestinians, have closed off the Red Sea. So that's changed the trade patterns, the inability of certain shipping to go through the Red Sea. And so you have a limited amount of tankers. What happens? They have to travel further around Africa. Rates for tankers go up. So what I'm trying to tell you is there's always going to be wars and rumors of wars and these things happening. I think we're coming to which is part of that whole fourth turning, but there are going to be a ton of opportunities. So you should be optimistic if you're looking at it from that perspective. You should prepare. You should understand things for how they are, not how you want them to be. Most people don't do that. Okay. And then you say, okay, well, this is the way it is. I can't control it, but what opportunities come out of this? And how can I take advantage of that? Because your obligation is to your family first. Okay. And those people, your kin and your kind, if you will. So I think that's how you have to really approach this. I wouldn't get too upset about it. I move from high tax blue states to low tax red states or out of the country, but that's a whole nother discussion. A lot of people aren't set up to do that. But this is going to manifest itself and affect so many things economically, geopolitically, and like I said, it's going to cause distortions, and distortions are the feedstock for speculators. And here's a perfect example. People say, oh, no, John, we're not in World War III. So you have this moron, Blinken, who represents this moronic, absurd, ridiculous administration, First they had Janet Yellen fly over to China, good cop, we're going to do this, we're going to do that. They took her around, like treat her like a, visiting grandmother. And the Chinese, are very polite. They're not going to, do anything. And so then this moron flies over there, and this is what he says. U.S. Secretary of State Anthony Blinken will warn China that the U.S. will take punitive steps unless it stops sending weapons-related technology to Russia, as Washington considers putting sanctions on Chinese financial institutions. During a visit to China next week, he already went, by the way, Blinken will tell his counterparts that the U.S. and its allies are becoming increasingly impatient with Beijing's refusal to stop providing Moscow with everything from chips to cruise missile engines to help rebuild its industrial base. So the Chinese received him. They listened to him. When he left the airport, there were no Chinese to leave the country. There were no Chinese officials there. The U.S. ambassador, shook his hand and put him on a plane. The Chinese and Russians and the global East and South are not going to get dragged into a shooting war with the United States. The United States is trying to get a war going. This is their last throw of the dice. And so they already played their card. They already played this financial terror card with Russia by, impounding their assets. So they're going to do, this is why, even though Chinese companies are really cheap and I considered investing in them, I already got burned when they confiscated my United States put the sanctions on, and cheap Russian assets were uninvestable. Okay. And I lost a lot of money. So, they already tried this with Russia. It didn't work. Now they're going to try it with China. And so, there's so many things that the BRICS can do. Most of the resources on the planet are controlled by the BRICS now, or will be as it expands. It's going to slowly but surely continue selling treasuries, not buy more, continue buying gold, continue to disassociate themselves away from the Western financial system. They can kick China out of SWIFT. China already has an alternative system up and running. It's not going to work. That card was played. It didn't work. You didn't destroy Russia. You're certainly not going to destroy China. And, we don't have, it's like Mo Green when he was telling, I didn't really work out that way, but it's kind of like, you guys don't have that kind of power anymore. They were mistaken, of course, but, this is where the conflict comes from, and we keep raising the ante. Why don't we just understand that this isn't, post World War II United States, and that we have to get along with people and we have to have mutual agreement. This is the whole thing with Ron Paul. Nobody wanted to vote for that. They had their opportunity. But, we are controlled by an oligarchy that benefits from these conflicts. And so, this is going to continue until, this is going to resolve itself one of two ways: a shooting war, which I believe the U.S. wants. I believe these people actually want a shooting war, because this solves a lot of problems for them that are coming down the pipeline. And secondly, or it could solve itself just politically over time as the U.S. continues to have to recede and pull back, because they're just overstretched and the economics won't allow for it. The debts won't allow for it. The problems that we're going to run into financially trying to maintain this empire simply aren't going to allow us to do it. And so I think the Chinese are patient. The Russians are patient. They know all they have to do is wait. The United States is self-immolating itself, and with its debts and its problems internally. Again, not only are we in World War III, we're also in a cold civil war here. We're not united. Nobody's voting for this. Nobody wants to deal with this. I mean, the United States, I have predicted before, will not probably exist as an intact political entity in 25 years. It can't. There's irreconcilable differences between 50% of the population with the other 50%. And a lot of people say I'm wrong, or well, that's my opinion. I'm willing to have that discussion and show you what I'm talking about. You have an administration that has weaponized the Justice Department against its enemies. I'm fully for if it flips. Now, what's good for the goose is good for the gander. And so, if it flips on this next election, if it did, and you get populists in there and Mr. Trump gets back in there, if they go for payback, I'm all for it, because you can wipe your butt with the Constitution. It doesn't mean anything anymore. Okay. It doesn't. You just see what's going on in this country and the abuses of government, and even at the federal, state level. You see it all the time. And if you don't see it, you're just choosing to ignore it, or you're on the side that's benefiting from it. So anyway, I think this is going to have unknown and profound effects, like I said, economically, socially, politically, that are going to create opportunities for speculation and investment. Okay, guys, that's it for this week. Appreciate the following. Channel continues to grow. We thank you. Appreciate it. And we'll talk to you next week.